Hello, I'm Debbie Bell-Hosking for FinextraTV at NextGen Nordics 2026 in Stockholm. And I'm joined by Andre Zimmerman, who is the head of pre-sales at Coconet. And we're going to be talking about treasury management for SMEs. So Andre, welcome here to our studio at the event.
Perfect. Thanks for having me, Debbie.
It's been a busy day so far. So lots to talk about.
Absolutely, yeah.
Yeah. And of course I mentioned we're talking treasury management for SMEs. So initially, can I ask please, what would you say are the first steps, the initial steps for smaller SMEs to increase their cash visibility?
I think that's a very good one. So overall, I think it's about combining technology and, let's say, operational processes that you have to change within the SMEs organization. Because technology, especially open banking, for example, allows to aggregate a lot of data meanwhile. And I think especially in the Nordic countries, it's quite advanced already. What's possible with really widely spread PSD2 services and other open banking APIs. And this data that customers can obtain from these services from third-party banks or from aggregating different data sources just have to be leveraged into cash management and treasury operations. What do I mean by leveraged? Well, it's not only enough to have visibility on the data, which is good, but the second step should be to make meaningful decisions based on the data. And that's when we usually see on Coconet side, where we are providing with banking channel solutions, that more and more banks are also focusing on offering value-added services for their SMEs when it comes to cash flow forecasting and to really making concise decisions and recommendations based on the data that a customer can abstract.
Having good data, being able to use that data for forecasts.
Absolutely. So forecasting is one hand side. I think if you would now take that a bit further down the road, it's also about when we're talking AI, when we're talking about assistance which I can get from artificial intelligence, it's really about allowing customers to get better insights into their financial situations, because the numbers are the one thing. On the other hand side is what I meant, what do you make out of these numbers? And what you make out of these numbers is basically taking business decisions which have real impact on your company, on the growth path, or maybe also in struggling economic environments. It decides about continuing the business or closing the business, right?
Yeah. And I'm going to pick up on a few things you said there actually, which is going to lead me to your Chief Financial Officer, for example. How should they be adapting their own cash flow predictions, particularly in the wider picture, perhaps, of compliance and geopolitics?
I think we have to look at where many SMEs are standing at today. And nowadays, especially the smaller ones, they are not really running completely treasury management systems and sophisticated operations, oftentimes working in spreadsheets, which go a very, let's say, linear one-way road in a sense, so you don't have too many variables for calculating scenarios, for running different economic situations that might occur, like shift in interest rates, shift in FX rates if you're operating in multinational environments with different currencies. And what we see is that those CFOs have to shift from this linear one-way road forecasting to a more adaptive and more scenario-based forecasting, because no one of us can tell what's going to happen tomorrow or the day after tomorrow, which basically means you have to be flexible and also your forecasts have to be.
Yeah, you took the word out of my head actually. I was thinking flexibility and you said flexible. So we are talking SMEs. So let's say modern treasury department, what would you suggest they need as their toolkit so they can balance those perhaps more traditional management styles with the newer methods?
Well, I think it's not only about the toolkit. Well, toolkit now sounds very technical. And now if you would ask me from a software provider side, I have to love technology, obviously, which I do, but I think it's important to combine technology with real life use cases, which basically means, I think, taking your status quo, where are you at today? Are you still running on a spreadsheet forecast? Are you already in a more adaptive way of forecasting? And then thinking about how technology, this comes down to the toolkit again, can help you improve your existing processes. What do I mean by that? I think it's no longer about this isolated cash flow forecasting, liquidity forecasting piece, but it's also about how could you glue your ongoing internal processes like invoicing processes, talking about electronic invoices, for example, which offer a lot of potential for automation. So how can you connect banking processes and company intern processes by utilizing, again, technology? So when you're talking about workflow automation, I think there are a lot of new players in the market like N8N, and you name all these kind of software providers out there. But I think their solutions are great, but they can only come to life if you combine them with real-life use cases. And that would be my take where companies should start. What is your status quo? Where would you like to get? And what's the most meaningful toolkit or technology set you can use to get there?
Great, I like those questions. So we've got more than initial steps from this interview, so thank you very much.
Thanks a lot, Debbie. Thanks for having me.
Thank you, Andre.